What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is your Friday market wrap-up, and I do apologize this is coming out late, man. I fell asleep last night and wasn't able to get it, but it doesn't take away from the quality because everything we're talking about is how this week unfolded, and I got a strategy for you guys moving into next week. And a big question from the front line that aligns with the strategy because a lot of you guys are getting into these stocks and you don't have a plan. So we're going to try to spin that up and get you guys a plan moving in there. But look, right now I need you to like, share, and subscribe, and I need you to come along with us on the journey, man. Check the description tab out. All the information covered in the videos there. And as always, if you're ready, follow me and let's go to war together. Traders War Room wants to remind the viewer that all content on this channel are for education and entertainment purposes only. You are responsible for every move you make in the stock market. Have fun, tread cautiously, but definitely go to war and let's get it. All right, team, welcome back, man. It's Friday and you know how we rock. So we're going to get at it with the Buzz Report and talk about what's hot and what's not in the stock market and see how this market closed this week. Let's get it. So up first, hey, here's how your markets close. Look, green across the board. The Dow's up, the Nasdaq's up, the S&P's up, and our bond yields are still staying around the level they've been at for a couple weeks. So all in all, not a bad day in the marketplace today. Here's the movers and shakers. Most active, GOVX. Man, we alerted that real quick, and we saw that SPY was doing its thing too. I saw a lot of stuff trending on social media about BABA. Our top gainers, man, RGC. I told you guys, that one snuck up on me. I had my eye on some other things, and that thing just exploded. FLGC, again, had a great day. GOVX is there, and DATS. And in our losers, ENDP, Hexo, SNOA, and Fate. All right, in our sector performance, we're looking, man, green across the board on the 1 day. But you can't just look at 1 day. You got to look at a full picture. So we got to pull the 5 day. And we see that healthcare leading the way. Next is utilities and consumer staples. And energy topping out the very bottom. Next, materials and financials. So definitely financials, materials, and energy will be on our watch list for next week and the next coming week because they can't be down that low forever, man. They got to have a little jump here and there, and we're going to catch that and ride that to the moon. All right, and we got some futures, man. We got a few green, a few red. Now, you guys know how I feel about futures. They are a glimpse into what possibly could be so you can make a plan. This is not gospel. Do not take it as word, okay? You got to make sure that you play the market for what the market gives you come the opening bell. Now, bottom part is orders filled by Fidelity. Now, listen, this can be Fidelity or can be any other broker out there, okay? I have Fidelity, and I like what I see on Fidelity, so I use Fidelity, but, man, you're looking at any NVDA, AMC, BABA, Tesla, Microsoft, GOVX, Amazon, Apple, Myrna, and TQQQ, okay? Those were the orders filled by customers that led the pack. All right, and we're looking at premium calls versus puts of the top big boys, and we see that Johnson & Johnson leading the way with calls, SPY leading the way with puts, and then you got some Tesla and Amazon power, some Microsoft and BABA, and you can tell the rest, okay? We look at this because this gives us an idea of individual stocks and what the momentum and the sentiment is going into next week. All right, the top news story, we're using Newswatch. S&P 500 hasn't fallen from peak in nearly 200 sessions. What does that tell the market historians? Listen, so historians are going in about these theories of the melting point, okay? The stocks, extremely pushing up, continue making new highs, and then an extreme crash, right? A huge correction, things of that nature. You're kind of seeing some remnants of it, that the investor is not in it for the long haul right now because you're seeing a lot of things spike up and then selling off, even on good earnings and good sentiment and good growth potential, things of that nature, which tells me that people are securing profits when profits are presented to themselves. And this is the big money we're talking about. So we need to be doing this as retail investors. So I need you guys, anytime that you're in profit and you're not in a position that you're going to hold for 5, 6, 7, 8, 9, 10 years, okay, you guys need to be considering taking profits because it could be a little too late when you want to take profits and it's already spiked down past your entrance points, and now you're in a long position of a stock that you don't want to be in a long position. So consider taking profits anytime profits are presented to themselves, and not looking for that extreme home run every single time. All right, and I got the Traders War Room week in review. Man, let's go over what we did this week and talk about some of our winners and losers. All right, team. Now let's talk about what we did this week of August 16th. Okay, on the left in the blue, you're going to notice all the trades that we got in, right? All the tickers are there. We either made money or lost money. You can see the emoji that kind of represent what direction we went. You see money signs, we probably made money. You see green vomit and angry faces, man, we probably took an L. Top right in red, those are swing trades that were still in. We alerted those at the end of the day. And the bottom right on the green, that's our roll up. Okay, 21 total trades, still in 5. We took wins in 10 of them. We took some sort of losses in 6 of them. Total win percentage is 62.5%. Now, I do want to say sometimes we didn't take significant losses. Maybe it was a 70-30 loss, right? We secured a bunch of profit, but our stop loss triggered. That's part of the game, okay? And anytime we take an L, I'm considered it a loss. If we didn't get a full, complete 100% win, it's sort of a loss, okay? And that's the way I roll with it. And so the key to this is staying disciplined, right? Choppy markets like we're in, where people are securing profit quicker than normal, man, you got to make sure you secure your portfolio, and you're going to take some L's, okay? The idea is to make way more money in profit than you do in losses, and if you're doing that, you're doing just fine. So that's it for transparency. I hope you appreciate it. Pause, look at these tickers, see what we got into next week, and go ahead and start planning out your strategy moving into the market. All right, team, we're going to go over the recap of the Traders War Room stock of the week. And we did a viewer's choice this week, and that stock was CLSK. So let's check out, see what it did at the beginning of the week and how it finished the week, and see if we can identify any strengths and weaknesses. So the stock of the week was CLSK, and we could see that it started off high above $14 and between $15, and then it had a dramatic decline where it kind of started hovering around $10.40 and $11 area, and we see some heavy accumulation. So what does that tell me for the dramatic decline? Well, probably earnings, but let's go try to find some news and figure out exactly what dropped it down so much. All right, and just like we thought, man, earnings, investor sentiment, growth potential, things of that nature, okay? People aren't looking long-term for stocks at their current prices, all right? They're thinking long-term when they can get the stock as low as possible and ride this thing for years to make a dramatic increase in their portfolios. And that's exactly what's happened with CLSK. A lot of big investors think that this is overpriced. They want it down lower, and at the lower levels, they're going to start accumulating more and more shares for long-term. So going back to the chart, what do I see? Well, I see all the indicators pointing towards up. RSI is looking like it's curling up. MACD curling up. Money flows coming in. AO is above. So do I see some bullish sentiment short term? Yes, I could see this popping up maybe around $11.50, $12, maybe even $13. But ultimately, I think it'll come down a little bit lower. I think big money investors want this as low as possible, and I wouldn't be surprised if we see $9 area with some heavy accumulation from the institutions. So definitely at my point, if you guys are in this higher than the current levels, it's a hold, and you should be considering dollar cost averaging in if you want to start a new position, but nibbling small positions to get your position started, and on any type of weakness, dollar cost averaging in to build up your position if you're a long-term holder and a believer in this particular stock. All right, next up, we got questions from the Frontline, man. We got a question from the Discord, and I like this question. It's kind of a long question. I'm going to give it to you in a basic Barney style, but definitely this is something I see a lot in the social media platforms. People are in the same boat as this gentleman here, and so we're going to talk about it, and we're going to break it down. I'm going to give you guys an idea of how to move from here. All right, so normally I give you the names of people, but he's talking about specifically some investments that he made. So I'm going to leave him blank, okay? But the question he's asking is relevant because people are interested in this. So he's talking about he follows some good traders and he follows a few plays and he hops in and he switched over some money from AMC that he's deep in so that he could buy some option contracts, but he's never able to catch the contract and make money off it, and he keeps losing. He wants to know why this is happening and how he can grow his cash to catch back some of his losses and make profit in the long run. So I thought this particular question was a good segment to do since we haven't hit on our principles of success in TWR for a while. And we're going to talk about planning, because this really revolves around having a plan, sticking to the plan, staying disciplined, and getting in and getting out based off of your plan and strategy, okay? A lot of new investors, you guys are getting in with a bunch of different plans, pieces from whole sorts of different plans that you're watching on social media, influencers and things of this nature, and you guys just aren't sticking to the guns and following a disciplined approach. So we're going to talk about one individual plan that you can utilize. You got to stay disciplined and really pick a plan that matches your personality of trading, chop it up, screw it up, make it yours so that you know that every time a stock goes into this particular window of opportunity, you can strike and have a high probability of success every single time. And once you get good at that one strategy, then you can learn a new strategy. But you need to focus on one that's a success that you can do every single time that a strategy falls into this plan. So let's talk about one so that you guys can do some homework over the weekend. All right, team, in the winning strategy, we're going to go over the inside bar, man. I like this one done correctly and trained properly and making this your own. This is a win every single time you use it, okay? High probability, 80% win rate. Sometimes it's just not going to be there, but other times you stay disciplined, you follow the rules, and you make this strategy your own based on your personality. You're going to have a high probability of win rate every single time on good stocks with good momentum and good volume and good sentiment. So let's talk about it, look at it, and see how it plays out. So I'm going to use Snap for this because Snap had a good one previously that showed us that it does follow this pattern at times, and then it had one recently. And so it's a good idea to use something because patterns tend to repeat themselves. So if it worked once and it worked significantly, it may work again on the next leg up. So bottom arrow right there, you see Snap had an earnings call and had what's called an inside bar right there, and it gapped up hard, okay? I mean, we're talking about gapping up almost close to $80 from underneath 60, looking like $62, somewhere around there, right? That's a significant increase. And if you had, say 5 contracts, man, you're looking at some serious bank, okay? Now, the second arrow right there at the top, you notice that we have another inside bar pattern where it kind of started accumulating, and we see that it had a similar move, just not as dramatic, right? Listen, up or down, sometimes it's going to be dramatic, sometimes it's not. And also we got to remember there's gaps to be filled, but we want to pay attention to that second arrow. So we're going to hone into a little bit. I'm going to show you the inside bar strategy that you can implement on any stock that you see in this pattern, as long as it's trending and it has volume associated and good price action. All right, now look inside that yellow square, okay? You have an outside bar on the left, highlighted with the green arrow, outside bar, and you have not one, but 1, 2, 3, 4 inside bars within that same outside bar, okay? Now, listen, you could have made money on any of those inside bars, but when you got 4 inside bars inside of an area, okay, what does that tell you? Well, that tells me that that is a strong accumulation in that particular area, and this is prime for a move up or down depending on where the strength or the weakness comes from. So let's look at what would be a decent idea of setting up a plan going into next week on Snap if we saw something in our benefit that we can make money off of. Now, look into this chart right now. Mind you, this is the daily, okay? But we notice we got that red outside bar, right? And we got 4 inside bars inside of that red bar. Now, this is definitely a bullish accumulation, no doubt about it. You can see that all of those are green candlesticks. They're all tight. This is an area of bullish concentration within the stock between the $73 and $70 range, okay? People are trading in between this area. Now, we can make money on this, okay? Now, I want to highlight, you got your top level resistance for the short term at about 74.58, and your bottom level support at about $70.06. Now, I average a little higher, a little lower, just based off of experience and because we want to be careful in anything that we get in. But I don't want you to focus on those. I want you to focus on the purple, okay? That top intra resistance of 73.10 and that intra support of 70.70, okay? Now look at that last inside bar right there. That one is underneath that 73.10, but above the 70.70. So if we open on Monday and say we open and hold anything above $73.10, we're thinking calls, okay? Now this is also particularly day trading and not really for swing trading, okay? You're looking to make money right then and there off the trend, all right? So if we open above $73.10, it's a high probability that we're gonna continue going up, at least in the short term. And usually when you got an uptrend, you get two legs out of it, okay? You get, what I mean by a leg is, I'll show you what I mean by leg. Basically you get one up, then a little down period, then a second up, and that's where you need to sell, all right? Same thing goes with the put. If we open below $70.70, we're thinking put. Now, it definitely could shoot up from there, because Snap is very popular, it's trending, there's a lot of volume, a lot of people interested in, and once it goes below $70.06, a lot of people are gonna be like, ooh, I need to buy in and jump in on this. But we can still make money short term. So if we open lower than $70.70, we're thinking put off the bell, and we can make money on this, writing this down. Usually one leg is safe, especially for popular stocks that are dipping, but sometimes we can get two legs. So down, a little consolidation, a little up, another little downtrend before it takes off up again. So those are some strategies and planning that I get into that you need to do your homework on the weekends, looking at charts so that you can get a plan moving into next week. Now, we're going to test this. I'm going to show you what it did a couple days ago and see if this idea works. Okay, so obviously we know how it closed on Friday, okay? Because Friday's over, this is Saturday, right? And sorry about that, I'm doing this video a little late. I fell asleep finishing last night, so I'm getting it out because it's important. You guys need to know this stuff. So we're gonna focus on Thursday, right? So that yellow box is how Snap closed on Thursday. And we put our points out there for attack, just like we did before, right? We got a little bit below it at 70.32 and we're a little bit above it at 72.69. So that's our trigger points, right? If this thing opens above 72.69 or hits 72.69, we're thinking a call is in order, right? Now, if this thing opens below 70.32, all right, we're thinking a put is in order. So we're gonna go into the 5-minute chart, and I like the 5-minute chart because it takes out the noise, you know, especially high volatile stocks. Man, the 5-minute chart takes out the noise of all the ups and downs and doesn't have you constantly biting your fingernails because this thing is moving in some way or whatever, okay? Gives you a little bit slower pace so that you can make educated decisions. So let's look at the 5-minute chart and see how this did off the bell. And remember our level 72.69 for calls, and we're looking at 70.32 for puts. All right, so here's how it did on Friday, right? Off the gate, this thing shot up, okay? We're not even thinking about put because it's not even near our 70.32. So get put out of your mind, right? We're thinking call. This thing is taking off. Boom, it hits our top level trigger, 72.69. Our call goes. Now, I didn't get in this play. I'm just using this as an example based off of this inside bar strategy, okay? So boom. Our call goes off and it triggers, right? So now we're in this play, okay? And it spikes up a little bit, comes back down. Spikes up a little bit, comes back down. Now look at that pattern that we have. We have a pretty good, you know, consolidation period in between certain levels. And we got an uptrend going on. We got an ascending wedge, right? Now, we could have made some money here at 72.97. We could have made a little something out of here, right? If we sold because we had a day trade or something like that, that's cool. But we got to remember, this is Friday. Are we buying contracts that expire on 20 August because they're cheap and they're lotto? You know, maybe. But probably not, man. This is probably the swing candidate that we're going into next week for, right? And I'm liking what I'm seeing here. So this would have been an ideal play because it triggered our call. We got our 27 August contract for $73 triggered, right? So we're in this play. It expires next Friday, and we got this hard consolidation period here, 72.69. So all we needed to do is open on Monday at above this level, and this thing is off to the races because that $73 range for the breakout is right there, okay? So we just needed to go towards that $73 and hopefully exceed it, and man, we're making money, okay? So this is how the inside bar strategy works. I know this was very quick. Check the description. There's a link so that you can go into inside bar strategy, but I want to hit home the big thing. You guys are probably like, well, Chuck, you could have gotten it at $71 and made a killing off of this one in a day trade. Yeah, but it didn't get into my plan, and that was the whole idea for this segment, right? Plan, strategy, staying disciplined, okay? It didn't hit my put levels, so I didn't think put, and it hit my call level. So I went in and I got in with my call, okay? Now, I didn't get in at the $71. Why? Well, because it wasn't in my plan, all right? And I'm not gonna go FOMO. Oh, man, shoot, snap, man, it's taking off. Bam, I'm in, boom. Never fails. It'll dip, okay? And I get it, it didn't dip. We already know that because this already happened, but having FOMO more often than not, is a recipe for disaster. So you got to have the plan, you got to stay disciplined, and I promise you, if you have a plan, you work it out, you do it so that you become an expert at a certain strategy, man, you will be more successful than not, and your wins will outweigh your losses in spade. Now, I'm gonna start a whole segment in these videos about different strategies and things. This is the inside bar strategy. I hope you guys liked it, man, and I hope you get something out of it, okay? So definitely try it out, do some paper trading with it, and see what happens. And this is gonna be our stock of the week, and we're gonna look at other stocks that use the inside bar strategy this next week, and we're gonna see if we can identify this pattern making similar moves in other stocks over and over again. All right, and we're about to wrap up this video, okay? But real quick, man, part of being in a coalition, a market coalition, as like I say, is that you got friends, you got other groups out there of like-minded investors, like-minded individuals, man. You guys are all working together. So I want to give a couple shout outs, and I want you guys to check the description out because there's some links to some of these great individuals that have groups that are doing great things for people out there, and I want you to look them up, and I want you to spin yourself up on them. So let's give a couple shout outs right now. All right, big shout out to Brendan, man. He has his group on Discord, Dedicated Investors. Man, this is a great group. It got a bunch of great individuals out there. I post on there as well, but man, it has a whole bunch of people on there that are really out to spread and share knowledge and grow as a community. And here's a couple of the big highlighted people other than Brendan himself, man. Some of these people, man, they're good people. So if you see them posting and you check this group out and you get in, man, watch out for these people. All right, Machete, he's one of the guys, man, he's out there all the time posting things and doing bots and really spreading a lot of knowledge and answering questions from the front lines on this particular group. Crazy, man, he's out there. He's doing great things as like a moderator and admin for the group. He's getting a lot of different type of feeds, man, a lot of things that push information about the stock market in general, all for the benefit of the user, man. So he does great things. And Nexpert, man. Nexpert is a guy that I talk to often on the DM, man. We're always bouncing ideas and things of that nature about option plays and strategies. He's really about training and educating and things of that nature. So he is a great resource for anybody that has questions about trading, specifically options, and definitely advanced spreads, things of that nature, because he got a lot of experience. So, hey, big shout out to Dedicated Investors. All right, team, that's the video, man. Listen, I know that was a lot, okay, especially that inside bar strategy. You guys need to work that, okay? We're going to go over other strategies throughout the week in a couple videos, and I'm going to have some specials on just strategies in general, but you need to get one strategy that you chopped and screwed up, that you are good at, that matches your personality so that you can follow. And here's the difference between the pros investors, the experienced investors, and the newbies, okay? Discipline to the plan, okay? Sticking to the plan, not having FOMO. If it doesn't hop into your plan, you don't hop in, okay? It has to align every single time. Otherwise, next on to the next one, okay? So that's the difference really between the experienced retail investor and the new retail investor and our battle against the professional institutions, okay? Is that discipline to the plan. Now listen, Here at Traders War Room, we look at the stock markets like war zone, man. The stocks and the sectors, those are our battles, and we do it together as a team, all right? We are growing a true, genuine community of like-minded investors who like to share and grow together. If that sounds good, hit the description tabs. All the social media platforms are there. Like, share, and subscribe this video. And if you're ready, follow me, and let's go to war together.